Now we'll be having a very interesting topic on digital lending, and as you very well know, loans via mobile apps have skyrocketed in Kenya, and a recent survey indicated that over 80% of adult population have mobile app lenders. And to talk a little bit about this digital lending space, I am joined by Annstella Mumbi, who is the General Manager, Tala. Welcome to the program.
Pleasure.
Okay, maybe you can start by giving us an overview of the credit market, right now. I know we are going to quarter four, or rather we are in quarter four. I'd like to know now, going forward, how has it been the current state of the credit market?
Yes, for sure. Definitely is preaching to the choir here, but it has been a tough period for Kenyans across the board. As Tala, I think this is something we had anticipated from the start of the year. We did run something we call the Tala Money March report in March, and at that point we were already seeing consumers having a prediction of a tougher year going into 2023, and they were actually predicting that they would be borrowing less and essentially cutting out a lot of unnecessary expenses or luxury expenses. So fast forward to close of the year, that is a trend we've mostly seen. I would say the consumers are very cautious around credit and ensuring that they don't borrow beyond their means, and at the same time cutting down expenditure more generally.
With the high cost of living and high cost of doing business, I'd like to know maybe how has this impacted maybe digital lending and borrowing?
It is a big challenge, right? If you think about inflation, we've seen the highest levels of inflation in the market than we have before. A lot of slowdown growth if you look at our GDP at the moment. So more generally, I would say businesses have been the most affected. And this is mostly two-part. One is when it comes to actually the cost of inventory, where they actually are having to pay more to purchase goods. And then the second one is reduced consumer spending, where the Kenya shilling is worth less relatively. So you find that there is not a lot of people who are actually going in to be able to purchase from businesses. So if you combine those two factors and extrapolate the impact into the economy, you see generally a slowdown economy. And of course, when it comes to credit, which is essentially powering these ecosystems, then the challenge starts to move into that space as well, where you'll see businesses actually do need to borrow more to meet their needs. However, they are challenged in terms of their ability to repay.
As Tala, how much you've lended since 2014? That's when the company was launched here in the country.
So far, we've actually been honored to have served about 3.5 million Kenyans who've taken at least one loan from Tala, and our disbursements to date are about $2 billion, which translates in today's Kenya shilling to about 300 billion shillings so far.
The regulations that were launched in 2021 by the CBK, how has it affected the industry?
Number one, I'd like to give a picture of the growth of the industry since 2014 to date. So Tala was a market pioneer back in 2014 alongside Mshwari. Fast forward to last year, we have about 300 plus digital lenders, and a lot of the challenges that started to come up in the sector were mostly around consumer protection. We've all had stories, horror stories, if I would call it, of debt shaming, where people's family and friends are being called. And as Tala, we had to really think about, as the largest player, as a market pioneer, how do we start to create safe operating environments for consumers? So it was two-part. One was the founding of the Digital Lenders Association of Kenya, currently known as the Digital Financial Services Association of Kenya, which has close to 30 members. And this was ahead of regulation to start to set the parameters of how the industry would run, and also help Kenyans identify who's a good lender and who's a bad lender. Secondly, now of course as DIFSAC, we did work directly with CBK to come up with the regulations. And if you look at what the regulations are about, it's mostly around just safer operating environment and making sure that customers have a very clear understanding of the terms and conditions before they get into a loan agreement with a different player. So as Tala, it has not affected our operations since we are a global company. Therefore, we have always abided by global operating standards. However, as an industry, we think of it as it will clean up the industry and help Kenyans to really understand who's a rogue player and who's a good lender, and how do you actually, what are your rights when you are actually interacting with different lenders.
Now, going back on regulations, what do they say about debt shaming and insistent calls that we have seen some app lenders make?
Number one, the point of the regulation was to create a safe operating environment for consumers. So this means making sure that all players abide by the same rules. Then number two is we are a market leader in terms of digital credit globally. So it was actually a big feat to cement what the operating standards should be, even globally, so that as other markets start to create different licenses for digital credit providers, then Kenya is the standard. So therefore, if you think about that, it means as a consumer, should you be having a problem with a lender, then now you actually have the grounds to be able to make reports. And beyond even the central bank, we've seen the Office of the Data Commissioner really being very active in the industry. A couple of weeks back, we saw a couple of lenders being fined, which starts to bring a lot of trust back into the sector. Last example I'll give is right now we know that for consumers, being licensed by central bank is one of the top considerations, which has not been true from past years, but now it is the third topmost consideration when a customer is choosing a lender.
I know you sit in the board of the Digital Financial Services Association. What necessitated the change of name?
Oh, yes. So I think it was just a factor of realizing that Kenyans need a lot of services beyond credit. And even if you look at Tala today, a lot of the questions we've gotten is, we've served us very well for the last almost 10 years. Are you able to offer us additional financial services? So that is why we decided to expand the scope there, where we're thinking about it as how do we grow beyond just lending and into deeper financial services, as we are all looking to become the financial partner for our customers.
Now, millions of Kenyans are indebted to mobile app lenders, and previously digital lenders would use uncouth methods maybe to recover some of these loans. I know the regulations are there to bring sanity to the sector, but as Tala, how are you recovering loans maybe from defaulters or people who are not following a payment plan?
I would say there's always 2 points of recourse. So number one, when a customer defaults, of course we do give a grace period, and then after the grace period the loan will be rolled over, and it's usually about 8 to 9%, which is a rollover fee, and this is a one-time fee that we charge the customer. Beyond that, we create a payment plan to enable you to get back in good standing. So we think of it as at any one point in a customer's life they will have a default event. So therefore, how do we ensure that you always have a clear path of being able to get back into the Tala ecosystem and be able to repay us? So that becomes the first phase. Another phase is the customers who are completely unable to repay due to big changes in their livelihoods, and we're able to offer late fee waivers and other interest waivers. So far we've done about 2.6 billion shillings in waivers, and we continue to think about how we support customers even as they're going through the different tough periods.
How much interest does Tala charge on loan?
So how we think about it is actually not a flat figure, which is very interesting in this market. What we leverage as a tech company and as a machine learning-led organization, and we know a lot of conversations have been ongoing about AI in this market. We do something called risk-based pricing. So right now you notice all the banks actually got go ahead from central bank to do risk-based pricing moving forward. But what risk-based pricing is we say that for the best customers they get the lowest rates, and for higher risk customers they get a slightly higher rate. So you'll find that different customers might tell you that they got a personalized offer from Tala, but essentially our rates are anywhere between 0.03% to 0.05% per day for a customer. We've actually evolved quite a bit over the last few years. For the longest time we had a very static product, which was a 21-30-day loan product. Over the last year and a half we've evolved to what we're calling the most flexible product in the market. So this means that number one, a customer is able to choose their due date, which aligns to when they know their income is coming in. So if you're a salaried customer, you can choose by when you know your salary is coming in, or if you run a business, you can map it to when your payments are coming in. Then the second bit that we launched earlier this year was actually daily pricing, where we're saying if you're able to repay us earlier than the due date you selected, you should be able to get a cashback, and you only pay us interest for the days you use. So then the last one is now where we're talking about amount, and we're saying that if you don't want to take your full loan limit, then you should be able to take smaller amounts and be able to top up based on your need. So for us, as you'll notice from what I'm saying, the big theme is flexibility.
Now, with the lenders being over 300 right now, Kenyans are borrowing from one app to repay another loan. How do we stop this vicious cycle?
It is a big problem, and actually I referenced the Tala Money Match report earlier, but from that report we've seen that majority of Kenyans have more than one loan, so they owe two or more lenders money. And it is always a question of two things. Number one, as a Tala, we ask ourselves how well designed are our products to be able to enable customers to get all their needs met with just us as a single lender. Then the second bit, which is just as important, is always financial literacy. We think of it as financial literacy has evolved tremendously over the years, but how easy is it for a customer to actually be able to access the information that they need? So within Tala, we do two things. Number one, we have a Learn Center within the app where you can actually go ahead and access the different information that you need. Then the second bit is actually coaching. You can be able to contact a personal finance coach at any one point, who you can call any one of our agents, and they'll provide you with personal finance coaching. So we think of this as like the initial steps in us starting to remedy a lot of what is happening in the market. But of course, this cannot be a single player. It has to be an industry-led initiative, which is what we've been doing through Money Match every March for the last 4 years. Okay. The advice we always give to customers is make sure you don't borrow beyond your means, and it has to start from a place of, if you're already there, how do you start to manage the debt that you have? And if you're a Tala customer or want to be a Tala customer, definitely give us a call, and we're able to do a bit of that personal finance coaching. But beyond that, I think it's just a question of, one, do research on which lender you want to use, really understand how they're ranked in terms of their consumer safety protection policies. Then number two is do your due diligence when you're taking the loan. Read through the terms of the loan. It doesn't mean you read the long document, but just the snapshot that most lenders currently include, to understand how much are you actually required to pay, and does that make sense for you, and would you actually be able to repay? And with that, then you will slowly be able to make strides towards your own financial freedom.
Now, going back to the digital credit sector and looking at allegations of lack of transparency on terms of borrowing, hidden charges, high annualized percentage rates on advance amounts, how are you as Tala changing this perception from Kenyans?
For sure, and I think for us it's always about making it simple for the customer. You'll find a lot of the challenges that have existed in the sector is a lot of this information is hidden deep within terms and conditions that are linked into a product, and most customers will not open that. So for us, our responsibility is around making it very simple, so that at the point of checkout, before you accept the terms of your loan, the terms and conditions of your loan, we'll list for you in a very simple format where we'll say, hey Mumbi, this is the 10,000 loan you're taking. You will pay X amount per day, and this is when your due date is, and we actually give you the exact date. So that way the customer has very simple information to remember, and then being able to follow up with SMSs that educate the customer, and also making sure that the customer knows how to reach you. So making sure there's a very clear phone number or clear SMS line that they can message to get more information. So I think transparency is very key, and especially if you're looking to build relationships with customers, which is the core of unsecured credit. There's no collateral, so it is all about relationships.
What if you fail completely to honor your payment plan and you default completely, what is the next step that you take as Tala? Do you get to list these borrowers on CRB?
No, so currently we did not list on CRB. We've been unable to list since 2018 or 2019, and this is true for all digital credit providers. However, with the advent of CBK regulation, we should be able to start doing it again, although we're yet to start. For now, I think it has been just creating different paths for customers to always be able to come back, including some very late stage waivers that we do. Beyond that, similar to any business, we just go ahead and write off delayed loans.
How much have you waived in the last couple of years?
So the number is about 2.6 billion shillings that we've waived, and majority of that was actually during the COVID period, because that is when Kenyans were really going through a tough time.
Now, a recent survey by the CBK had said that a majority of SMEs are unable actually to repay their loans in light of the ongoing credit crunch. Are you seeing the same thing happening with digital lending to SMEs?
So that is the bit of an interesting one, and that's where you start to see the difference between traditional institutions and fintechs. So for traditional institutions, they're more risk averse, where of course it will make sense for them to lend to a lot more stable players or people with more stable income. To give an example of Tala specifically, we are a mission-driven company, and our goal is to actually democratize access to credit for people who would otherwise not have credit. So you'll find that while banks essentially reduce lending to riskier profiles, for us that is who we primarily serve. 70% of our lending today is for business purposes. So that said, definitely it is a trend in this market where you're seeing MSMEs really struggling to get credit from formal institutions. But for us, we are focused on how do we continue to increase access, which is almost in contravention with how the other players are working. However, that said, we have to do it very responsibly. So we call it responsible lending, where we actually have to believe that you have the ability to repay us, and that is what we do through our underwriting models. Generally in the market, there is a decline for sure, and this has been reported very broadly. I would say on our end, no decline yet. We still continue to lend at the same rates as the start of the year. We're yet to reduce any lending in our business, and if anything, moving into 2024, we're actually looking to grow our business. The goal is to be able to 2x or 3x our business moving into next year. So therefore, the trend is actually more on the opposite end of what we're seeing from banks.
Earlier on, you talked about lending based on risk-based pricing, right? I'd like you to explain to us, from the 3.2 million customers that you lend, maybe on a daily, I don't know, it's a daily basis or a monthly basis, maybe you can tell us more on that. What does that mean for Kenyans maybe to understand, why am I not being given this amount of money yet I requested for it?
So how I like to break it down is, if you look at a lending model, it looks at three things. Number one is always fraud. We have to ensure that it's not a fraudulent party. Number two is ability to repay, where we'll say that it's not ethical to give you more money than we believe you'll be able to repay us. And then number three is willingness, where we look at your trend of how have you been repaying your other loans within the market, and have you shown goodwill and willingness to continue repaying. So that way you'll find that within Tala, we're able to give you a decision within 5 minutes, but it is a personalized offer. So what a personalized offer means is, if you were seated in a room with 10 people and 10 people apply to Tala, you'd all get a different offer and probably a different pricing based on your individual capacity to repay and your own past trends around how you utilize credit.
Maybe as you close, maybe you can share with us your outlook for credit and fintech markets going into 2024.
Yes, for sure. So how we think about it is we're coming out of the first phase of the industry. The industry turns 10 years next year, which is amazing. And for us, we believe that first phase was mostly around opening up access. Back in 2014, if you didn't have a bank account, essentially, you couldn't access credit. From our impact report that we released this year, we know that of our customer base, about close to 40 to 45% have accessed credit for the first time on a digital credit platform. So that is really, really powerful and speaks to the growth that the industry has brought into the market. So now as we move into the next phase, customers have a lot of choice. So we think of it as it's going to be mostly centered around consumer safety and just being very consumer-centric in how products are developed. So customers are looking for more accessible credit, more affordable credit. So you'll find that those are going to be the big trends over the next 10 years.
Okay. Thank you, Mumbi. Well, that has been Annstella Mumbi, who is the General Manager, Tala, speaking to us about the digital lending space.